Hi and welcome to the channel. Today we are going to analyze Lowe's. First we'll find out the dividend score, and after that we'll check the valuation with the help of fast graphs. Lowe's has a market cap of $128 billion, the current stock price is $210.97 and they operate in the specialty retail industry. If we take a look at the graph in front of us, we can see over a 10-year period that Lowe's has overperformed the S&P 500 by quite the margin. And this is with dividends reinvested for both Lowe's and the S&P 500. Now some financial data. The annual sales growth has been 8.2%. This is well above the threshold, so that's a green check mark. Same with the earnings, the EPS 28.2% the last 5 years. Booming business during the disease made improvement stores like Lowe's and Home Depot a blooming business. The earnings per share the next 5 years are estimates a bit lower, 9.4%, still within the threshold. The return on capital is great at about 19%. But the debt compared to the free cash flow they are generating is a bit tiny high. The threshold is 5 and this is 5.14 years. Now some yield data. The dividend yield is 1.99%. The threshold is 2, so same with the debt. It's just under the threshold here. That's an X. A buyback yield at 10%. And the payout ratio is quite low at about 28%. And the dividend growth rate is actually 19.47%, which is very high because this is the dividend king. They have been raising their dividend for 59 consecutive years. That combined with the growth rate of the dividend is extremely impressive. So all in all, that makes up for a dividend score at 8 out of 10. But it could really be 10 out of 10 also, because they missed the threshold with a very tiny margin. Now some valuation. Here we have Lowe's in fast graphs. The orange lines is the earning per share, the white line is the dividend. And we can see that of course consumer cyclical takes a bit of a beating during recessions like 2008, 2009. But after that it has been really smooth sailing, especially the last couple of years. And if we see the normal PE, which is about 19, and the current stock price, it has come down quite a lot in price. It topped out at about 260 and now it's trading at 210. And analyst expects a nice future growth of the stock, and if we compare it to the normal valuation out to early 2025, we can actually estimate an annual rate of return of 19%. Let's also check if the analysts usually are right. Here in the analyst scorecard, we can see that Lowe's has 17% beats, 75% hit, and only 8% miss. So these estimates are of high quality. Please hit the like button and also watch one of my latest video where I reviewed a subscriber portfolio. See you soon!